Okay, thank you, and good to be here. This conference is all about identifying value, and so with that in mind, I'll be talking about enterprise value over ounces, all-in sustaining costs, and a cost curve. And these are all important. That's what makes or break a project. And I heard someone yesterday saying about all these acronyms, so I thought I'd explain that that's what I'll be talking about. You know, running an ASX company is all about tension equalisation, which is a term I came up with today. On the one hand, we've got investors who can quite often be very short-term oriented, and we're trying to build a project which has a longer scale timeline. So it can be quite difficult. We heard Ian Bamborough at Saturn yesterday mention about he's on the roadshow raising money and people saying, have you got marijuana? Probably to smoke anyway. How do we do all this? And it can be very difficult if you're at the early parts of a project. So, you know, you're looking at moose pasture and rock chips. That's a long timeline. But you can jump the queue if you pick up a project which is well developed. And that's what we've done with Pantanillo, the gold project I'll be discussing today. So first, but before we get too far down the track, I want to talk about grade and the common mantra we hear, grade is king. The reason I bring this up is because Pantanillo is actually a lower grade oxide style project, and lots of people have said to me, it's under a gram a tonne, it'll never work, which is a load of rubbish, but I thought I'd address it straight up front. This is the Australia-New Zealand producer cost curve put together by Aurum Analytics and Argonaut. It's on their website. It's worth a read. It's actually very informative. This is Q2 this year. The red bar is Mandalay's Costerville project, grading 9.6 grams a tonne, the highest grade project in this producer peer group, and on an all-in sustaining cost basis, which is the metric that matters, it's ranked number 22. And then the green bar is Capricorn's Karlawinda project. That's just over a gram. In fact, their resource, I think, is 0.7 or 0.8 grams. So it's quite low grade, but it's ranked number 5. It's one of the most profitable projects. So we just killed the grade is king mantra. So on to our project and what we look for in a project. When at Flagship, when we're looking at projects, and we've looked at hundreds of projects, we're always focusing on cost and proximity. So we're looking for projects in lower cost jurisdictions and projects where we feel there's enough indicators around it that they'll be low capital intensity, so cost less to build, and have the metallurgy for low OPEX outcomes. And that gives us our position on the cost curve. And then we want a geography with well-defined permitting and regulations, because that can be the killer in project development. So proximity is all about access to key infrastructure, processing as required, and most importantly, deep labour pools, because as we move into these high-price environments, the pressure starts to build on services like assay labs, metallurgy, engineering, construction, and also labour. It's not often considered, but labour is one of the factors in mining which can be very expensive, and when it gets into tight supply, it really is expensive. On this map you can see we've got two projects here, but today we're focusing on Pantanillo. That's located in the Maricunga gold belt, which is the gold area. This is actually a very big gold belt in Chile, 100 million ounces in the gold belt, and I'll move into that a little bit as we move forward. So Pantanillo has 1 million or 1.05 million ounces, so it's quite a large project. We picked this up, we put our foot on it in February this year and announced it to market in April this year. But what's really interesting here, that it is supported by 80% measured, it was 80% in the measured category. So this has had a ton of drilling. It was owned by Anglo, farmed out to Kinross, two very big gold players, and then Orosur. This is all around 2006 to 2014. So it's got a large historical data set which we just secured, with over 100 tonnes of core and pulp and all exciting things like that, and so on. So it's a very interesting project. You can see a lot of other projects for you copper buffs out there. The Filo de Sol project is on this map, so it's in sort of that same region with all the majors and so on. Just to give you an idea of what's happening around us, Within about a 35 to 40k radius of Pantanillo is 60 million ounces of resource. We've got that 27.4 million ounces there. You can see that's Barrick and Newmont joint venture. That is one of Barrick's largest projects and one of Newmont's largest projects with 27.4 million ounces. So that's about 20k's, 25k's south of us. Then we've got the 10.7 million ounces, which is Kinross, and 11.5 million ounces, which is just to the north of us, owned by Hochschild. It's called the Vulcan Project. So very exciting stuff. Our project area, you can see the block here, the red outline is about 110 kilometres squared, so a reasonably large block. And what we're focusing on is that green shaded area in between T1 and T2, and that's where that resource of 1.05 million ounces is. The pit shell footprint is 850 metres by 200 to 600 metres in width, so 850 metres long. It's open on long strike, it's open at depth, and you can see there's 7 high priority targets. We're aiming for these alteration zones, volcanic alteration zones, which are the light coloured areas in the block. So there's a lot of opportunity in this area. So just moving on a bit, you can see the pit shell in that red and white dotted circle. There, that's the million ounces. And then you can see it, the white outline to the right, and that sits in the middle of a 5 kilometre by 1.2 kilometre soils trend, which is very exciting. And you can see the dark areas, which would be high priority drill targets, and we'll be aiming to do something with that. But it shows that it's not just a million ounces, it'll be a lot more in the nearer future, we believe. So we have an inventory growth plan. I made that up too. So there are four steps in our growth plan. The first is when this resource was cut, it was on a 0.3 gram cut-off. That's in 2010. Where the gold price is, actually where the gold price was at around 2,500, moving along, all of our neighbours are working on 0.15 to 2 grams a tonne, which means that when we recut the resource, we capture a lot more gold in the pit shell. Then we're going to recut the pit shell using today's economics. So the pit shell was cut during in an economic environment with 1,035 gold and 2010 costs. Clearly gold is inflated faster than costs, which means that the pit shell will naturally grow at depth and outward, and will capture a lot more ounces. So this work is being done now. We expect to deliver a conversion from our NI 43-101 resource to a JORC resource in November, maybe early December, and also we'll be bringing extra ounces in. So we've got 1.05 million ounces now, and we're expecting a material gain in ounces. And then we'll be moving along to increase that again, and I'll get that into that in a minute. So right now the pit shell averages 200 metres in depth, and you'll see in a minute the deepest hole is 600 metres in depth, finishing in mineralisation at 0.7, which is the resource grade. So there's a lot to go here. So naturally, extensional and down dip drilling will be one of our objectives going forward. But at this point, we actually don't have to drill a hole to increase our resource. And then as we move along, you saw on the previous map, the T1 to T7 prospects will be focusing on T3 to T7, in a few years. So that's our blue sky. So just moving on to some cross sections to give you an idea of what's happening. You can see that green dotted line is the pit shell outline. I'll tell you where we are. You can see several cross sections here. I've selected 4. 2 are on the left-hand side and 2 are on the right-hand side. So we're moving from left to right on that cross section or that plan. And here we have on the left-hand side here, the pit shell in green, and you can see a lot of drilling under it. So the resource is constrained to that inside that green dotted line, and we've got drilling very deep under it with some fantastic grades. 193 metres a gram a tonne. Anyone would write home about that one. 8 metres at 1.72 is a bit of a winner too, and it just keeps going on. So there's a really high grade core in this. On the right hand side, we've got our deepest hole here. At the bottom of that hole, we've got 296 metres at 0.56 grams a tonne. That sounds a bit low. It's not really, and that's from 404 metres, and includes some big intersections closer to a gram, like 72 metres at a gram. So sometime in the distant future, we're looking to create a much bigger pit shell here and get down deeper. And then two more. These are closer to the middle of the pit, actually, and you can see that we've got a lot of holes which are finishing in mineralisation inside the pit shell. So they're in an oxide or mixed zone. That's what we're targeting, and they've got very high grades. So we see a lot of opportunity with some targeted drilling further down the track to bring more ounces in. So right now we've got 1.05 million ounces. When we deliver our MRE update in November, we'll add materially to that 1.05 million ounces, and then going forward we'll add materially again. So this is actually looking to be a bit of a monster of a project. We've had met work done here. You can see the met hole in the middle of the pit, pretty good. In the oxide zones, we were generating greater than 80% recoveries, in fact up to 85 after 30 days doing column leach work. That's pretty good. The great thing about heap leaching is you put it in a pile and pour your leach solution on it and the gold comes out the bottom. That's a non-geologist engineer's simplified version. Now, the value proposition, because that's what you want to know. I'm going to start with a peer group curve. This curve here contains ASX and TSX listed companies which do not have a feasibility study, are situated in various geographies around the world, actually, with one in Chile. So you can see that the peer group averages $142 an ounce, and right now we're valued at around $38 an ounce, unless you guys have been buying up while I'm talking. So what's really interesting here is third from the left-hand side is Andean Silver, which has a market cap of over 300 million, and they're valued at sort of over $250 an ounce. Their project is only slightly larger than ours, and that's sort of where we're heading. So first cab off the rank is to move up this curve towards the middle. So we're right now at 38. You know, you'd have to expect us to head towards the middle or the average of the curve. But because I think we have a well above average project, we should head well to the left-hand side. But that's pure speculation. What's key here, this is the growth analogue. So when we're looking at a project, we're always looking for the reason why we think our project should be valued or increase in value and so on. Because to keep in mind, and you should, just to back up a bit, go to our website, look at our presentation with all the disclaimers and stuff, but you'll see that management has around 35% of the company, and like you, we're here to build value. So this analogue here has Saturn Metals, now market cap above 300, and they're in their PEA stage, soon to be DFS, I understand. And then 40 k's to the north of us is Rio 2, a TSX listed company. Their grade is 0.48 grams a tonne, ours is 0.69, and they're valued at just under $1 billion Australian. So this is where we see where we think we can go. When I was introduced, it was mentioned that we just did a small raise, so it was just over $4 million, but we had a Chinese EPC group come in as a strategic investor. They love this project. So they came in with 2.5 million in 2 tranches. Xinhai will join our board. Xinhai has just brought to our board all the capability, or the capability set for metallurgy, EPC, feasibility and funding. It's a big Chinese group. It has a very good reputation. It's done hundreds of projects in China. I was just there last week visiting, and they said they had a Chinese customer who was wanted to get going with the high gold price. They built a crushing, flotation and a gold plant for half a million tonnes a year in 24 days. And these guys are on our team, which means that we expect lower costs, faster engineering, faster feasibility, and so on. And also we're tapped into finance, which is really important, and so on. So the reason I mentioned finance is we heard about the Lassonde curve yesterday. So where are we going and how are we going to fund it? There's the traditional sources of funding, but also there are the streamers, and 2 projects next to us have massive funding facilities from the streamers. One is Rio 2, capex of $117 million, funded by Wheaton Precious on a gold stream, and then next to us Vulcan for their feasibility, $15 million funded by a gold stream. So no raising money from the market. And then we've got Shanghai and that connection. All right, back to this curve here. And if we were to put Rio 2 and Hochschild, those 2 projects I just mentioned, on it, you'd see they'd be at the bottom of the curve. Our grade's higher, where we'll be on the curve. And that's what excites us about this project. Okay, nearly there, finishing up, plus 1 million ounces, 80% measured, 20% indicated, conversion to JORC and update in November, and then a lot more stuff to come through. So thank you very much.